One very hot topic right now that's going around, you guys have probably heard it, is cash flow loans, also called DSCR, debt to service cash ratio, where essentially the main goal is that you do a 20% down payment, and then off of that, to qualify for the actual loan, they're not going to look at any of your income documents. All they're going to want to do is they're going to want to get a cash flow analysis, essentially meaning how much is this property going to be renting for on a monthly basis, and they're going to compare that versus the mortgage payment. Ideally, I think they want to go for a 1-to-1 ratio, meaning they want the cash flow of the rent to cover entire amount of the mortgage payment. In this kind of market, that shouldn't be that hard. If for any reason we don't meet that criteria, let's just say the rental income is just slightly lower below the mortgage payment, we can still make it work. There might be some additional reserves we have to document, but there is a way. So why, you guys are probably asking, why are people considering this kind of program? Well, this kind of program is going to help, it helps everybody, but the main people that are going to benefit from this kind of program are people that are self-employed. What we do with self-employed is they're going to submit 2 years of tax returns. The last few years haven't looked all that fantastic, so we're going to try to maybe avoid that, but they can still buy a property. The main bullet points is like 680 credit score, 20% down payment. You can actually close in the vesting if you have an LLC. This program allows you to do that. Yeah, so it gives a lot of flexibility. Another update, well, there's been quite a big change in one of the guidelines when it comes to doing cash out refinances on conventional loans. Before, the guidelines said that you had to be on the title for 6 months before you could do a cash out refinance on a conventional loan. That recently changed. Now the waiting period or seasoning period is that you have to be on title for 12 months before you could do a cash out refinance on a conventional loan. Now, there might be certain transactions that this might not apply to. For example, if somebody comes in and purchases a property all cash, no liens on it, that could qualify for an exception. But if that is not the case, and some other criteria, just keep that in mind. Clients might be in a situation where instead of waiting 6 months to do a cash out refinance, it might be in a 12-month situation. So mainly just for you guys to be aware of this kind of change. You don't have to know exactly which client qualifies or not. You can just redirect them to us. We'll have that conversation, but this is just so you guys keep it on your radar. If in case it comes up, you guys are not totally caught off guard.